Despite falling oil prices and central banks being in uncharted waters, the Nordic economies still look stronger than most. But as Denmark heads to the polls, SEB's senior economist in Copenhagen joins me down the line to share his insights. Frederik, a change of government in Denmark has not traditionally signalled any major shift in economic policy in the short term. And regardless of who forms the next government, the outlook is for a continuation of the Euro DKK Peg. But how would you characterise the election run-up this time around?
What have characterized this election campaign so far has actually been that the two main parties, the center left and the center right, or the Social Democrats and the Liberal Party, have been even more closely aligned than normally in fighting, and they have been fighting for the same voters aligned around the middle. The economic policy is very much the same. It's minor differences due to different ideological views on the world, but when it comes to the overall economic impact, it's minor, and we won't even change our forecast by even a decimal, no matter who wins the election. And when it comes to the peg, to the krona peg, to the euro, it's also considered a very important part of Danish economic policy, has been so for a long period, going back to even before the euro. We had the peg to the Bundesbank's Deutschmark. So this policy is seen as an anchor in Denmark.
A new government does, however, open up the question about Denmark's position in the EU. Do you see many changes ahead? Could Denmark align themselves more with Britain, for example?
So I think this is pretty far away from what they are discussing in Britain, and I don't see any strong sentiment in Denmark towards something significantly different from what we have today. Although there is this thing with social benefits, and it also enters into the debate about immigrants in general, which where the lines are a little bit harder drawn in Denmark. But apart from that, I don't see anything significant, and I don't think that it will lead to real changes, because Denmark also want to stay on a friendly hand with the rest of the European leadership and Germany and France as well. So I think if we were too aggressive on this one, we could become less popular as a European member.
To remove themselves from the welfare state status, Social Democrat Finance Minister prescribed a course of spending cuts similar to those doled to the Eurozone's periphery, who are admittedly more economically vulnerable. But how optimistic are you for the future of the Danish economy moving forward? Is 2% GDP growth achievable in the next year or so?
Yeah, I think first of all, our own forecast is growth around 2% this year, and then actually somewhat higher, a little bit higher next year, more like 2.5%. And if anything, I would say that at the moment we think the risk could be a little bit on the upside, but reasonably balanced in any case. I think something that could surprise positively is the housing market. We have seen a stronger momentum in housing lately, and especially in the main cities where the flat prices are rising pretty quickly. So we are pretty optimistic that Denmark will grow strongly and will outgrow the rest of the euro area by a little bit, as it has done over the past couple of years.
Unlike Norway, Denmark seems to be benefiting from lower oil prices. Today's Norges Bank rate cut has led to the NOK dipping even further. The FOMC have indicated rates will be raised before the end of the year. Meanwhile, the SMB today expressed caution in their policy assessment. But how does Denmark play into the rate raise conversation?
I think what will be more interesting is whether the central bank will be forced to hike rates, because we are starting to see currency outflow after the massive inflow we saw in January, February, and part of March after the Swiss move. So now this flow is reversing, and we're seeing outflow. So the Danish FX reserves are now shrinking, still much higher than they were 4 months ago, but they are shrinking by some 1 to 2 billion a day. The question there is when this kind of outflow becomes so strong that the central bank needs to stop it by hiking rates, and we don't think that we're there yet. So we think that they'll hold the horses at least some months more, unless some big event happens where you would see flows changing direction. But that would be something that are outside Denmark. For example, if we get a kind of more of a clarity around the Greek situation or a crash in Greece, it could lead to either a new inflows or outflow from that perspective as well. So there are some uncertainties around this, but our main prediction is that rates will stay unchanged and the currency will stay at the current level pretty much.
Frederik, thank you for your insights. Well, that's all from me for the moment, but for more on the latest FOMC action, click back for an exclusive interview with Louise Macaulay. Goodbye for now.